Welcome to Coin Engineer, everyone! In this video, I'm going to give you some great tips for day traders. As you know, the market has been a bit frustrating lately, but you can't expect rises without some drops. That's the nature of the market. It can make you a lot of money when it wins, but it can be just as ruthless when it makes you lose. We've received messages from many of our followers saying they need some tips on day trading. That's why I wanted to make a video like this. I'll talk about some special indicators that I use, as well as a few that are really useful. Support and resistance help trade decisions. Some buy a coin doing well, but don't know when to exit. So instead of just memorizing it, when we understand the logic behind it, we can place our buy or sell orders accordingly. In fact, some people buy a coin and it's doing well, but they don't know when to exit. They don't know where to take their profits. Similarly, there are those who want to make moves during significant drops or big rises, so they don't know where to take their profits. Similarly, there are those who want to make moves during significant drops or big rises. Whether it's in spot trading or futures, I will try to explain these in simple terms. I really recommend that you watch this video carefully, because I won't drag this out too much and highlight the most important parts. For more videos on this kind of technical analysis, please don't forget to like the video. Specifically, let us know what you would like to see in the comments. So let's quickly make new videos based on that. Also, if there's anything you don't understand in this video, feel free to write it in the comments. Let's make new videos. Also, if there's anything you don't understand in this video, don't hesitate to write it in the comments. Right now, the daily chart is open, guys. Of course, if we're going to do daily trading with Bitcoin, we should use 15-minute or 5-minute charts. In this part, I actually want to explain the logic of support and resistance to you. So, we don't draw these lines randomly. Why do we draw them? No matter which technical analysis model you look at, lines are drawn, right? Some are trend lines, some are support and resistance. In fact, even when you use methods like Fibonacci, you still draw support and resistance. Why are these important? You can think of it this way, guys. Some people are insistently buying at this point. We call support. Look, when Bitcoin dropped here, there was a significant buying, right? Then it went up and there was selling. At one point, there was again a significant buying here. So the number of buyers has surpassed the number of sellers, and the price has turned back from here. A few days later, there was selling again. This time, buyers have started to buy at a higher price. This is actually a bullish signal. Why? Because buyers are actually willing to pay a higher price. At one point, it had risen quite a bit. It has also made an all-time high ATH here. Significant purchases occur. Price stopped here. There have been significant purchases again from strong buying zones. In the last drop, the point where the price stopped is right here. But it might not stop, guys. There's no guarantee. Supports will always hold. That's why it's necessary to use a stop loss. Ultimately, this is a buying zone for now. So, you can call this a support. For example, if you're someone considering buying Bitcoin, you can place your first buy order from here. Then, did it go down even further? Again, you use various supports when making purchases. This way, you lower your costs. You use various supports when making purchases. This way, you can reduce your costs. So, when making a purchase, make sure to buy from a support level, because support zones are the most likely places to react. Similarly, you can see that there are a lot of sellers in these areas, guys. Of course, resistance is not as specific a point as support. But in these areas, people have sold their Bitcoins, again, in the last sale. It has come from this area. We can also call this a resistance. Here we see the PP chart. Friends, I'm looking at the 15-minute chart. I'm roughly saying the price. You can see that these areas are being used as support. Let's enlarge our line like this. Look, it has used support. It has been used here. It has been used, then it went up a bit. Of course, it's a 15-minute chart. It won't present as clear a picture as a 1-hour chart, but it's obvious that these areas are support, friends. If the price goes below this level, it's best to stop and exit. It's expected that the price will go even lower. Let's see if that's really the case. Here it has tested upwards again, and the price has gone down. We should use support and resistance because we will place our stop just below the support. That's why we will make our purchases at support points. Even if we're not using a stop, we will buy in stages. So we shouldn't make a purchase from an illogical place. You shouldn't make a purchase just because the price is falling. This trend line could also be from the support points. In this way, you won't be too upset during big drops, friends. I'm going to talk to you about an indicator now. Let's come here. These are the indicators I generally use. I use it from time to time. One of the indicators I recommend is the smart money concept. This is actually a source for the trading method known as price action theory. An indicator Support and resistance are actually drawn according to the movement of the market structure. You can think of this as support, for example. Of course, price action is a very detailed topic, but you can use this indicator to identify the parts where the character changes or where the market structure breaks. Instead of drawing it ourselves, there's a ready-made indicator like this. So if you ask what it means, it actually shows the supports, just like it does here. Right when it broke here, it has made a retest and started its downward journey, friends. By the way, we're looking at the Ripple chart. There's been a % drop here. There's actually a resistance area here. The indicator draws this automatically. When it broke here, an incredible rise started in Ripple. So when support and resistance are broken, when the price moves outside of that area, it's expected that the price will move away from that zone. Friends, if it breaks down, it will rise. We expect a rise, then drop. We can say there's a high probability. What we expect is for it to rise a bit more, test that area, gather the liquidity there, and then move down. We anticipate this. If what we're talking about is a resistance, we expect it to go up a bit, then down, but eventually rise again. You can also use this indicator to determine support and resistance. Besides that, one of the most important data points for me when trading is volume data, friends. This is actually an indicator. It's already automatically available at the bottom on many exchanges. But most people don't care about this. They ignore it. In my opinion, it's something more valuable than many indicators. Volume, as it's called in English. For example, the price has dropped and you think these prices are low? You can't just decide this based on your own thoughts, guys. As I mentioned earlier, you should examine support and resistance. You need to check if it's close to support or not. Also, is it dropping with big red candles on the volume chart? You should check if it's close to support or not. Also, is it dropping with big red candles on the volume chart? Take a look at that. And is it dropping with big red candles on this volume chart? Look at that. If you see high volume bearish candles, you can check this with the volume indicator. You shouldn't go long or make spot purchases there. This is dangerous, as you can see. After that big volume drop, you can see this red part in the volume chart. An incredible drop has started. If you're thinking about making a purchase again, you should look for something like this in the volume chart. You can chase after consecutive big green candles, like this. Of course, this doesn't guarantee anything, but let's say it at least increases your chances. Another useful indicator, in my opinion, is the RSI. The RSI is the father of all indicators, guys. I think there's nothing better at showing overbought and oversold areas. In Turkish, it's called the Relative Strength Index. When it drops below this area, we can say it's below 30. Let's not go any lower. There are times when it goes like this, as you can see. It actually shows that there are too many sellers here. It also shows that there are a lot of buyers here. These are actually signals of a decline. But of course, this doesn't always work very well on 15-minute charts. It might be good to also look at 4-hour or daily charts. So even if you're day trading, you don't have to just look at the 15-minute chart. For example, it has gone down here and really came up from there. It actually gives a buy signal when it's down. When it goes up too high, it gives a sell signal. Using the RSI as the only source might not be smart, but if you use it along with support, resistance, and volume indicators, then it can actually make sense. Just don't rely on a single indicator, guys. In fact, even 50% of this stuff isn't technical analysis. The real secret to making money in day trading is risk management. It's about managing your capital and not turning it into a gamble. If you're swing trading, let's say you opened a position and you have the courage to hold it for a few weeks. Then there's not much of a problem, but if you're day trading, I think you should only open trades with about 5% of your capital. So if you have $1,000, open a trade worth $50? Because you never know what's going to happen, guys. You can use that money as margin. You can use additional to save your trade. This is really an important thing. You can use it to add. This is really an important thing. It's a lifesaver tip, especially for those who do day trading. Of course, if you're using a stop loss, this isn't a big problem. But unfortunately, most people don't use it, despite all our warnings. You should use a stop loss, guys. Or you should only trade with a very small portion of your money. Other than that, this market shows no mercy. Just a heads up from us. It might not work 100%, but I use it when trading. When going long or buying, I check 4-hour and 15-minute charts. It helps. Especially if I'm going long or making a spot purchase, I sometimes pay attention to the 4-hour chart and sometimes the 15-minute chart. It has actually been helpful for me most of the time. These are called engulfing candles, guys. This will be a tip about the shape of the candles. What we call an engulfing candle is when the body of our green candle, meaning the part excluding the wick, shows itself much more strongly than the previous red candle. It's about showing itself more strongly like this. For example, just like here, the opposite is true during a downtrend. Let's say there's a small green candle here just like this. Then there's a large-bodied red candle. Of course, this one isn't very strong, but you can see that this one is quite strong. Here, after the last bearish candle, a large-bodied bullish candle has appeared. At this point, if you're going to go long or make a purchase, you can go ahead and do that. Of course, without ignoring risk management. So instead of just buying because it's dropping, it's healthier to look for slight reversal signals and enter that way, guys. You can actually look for this even at support levels. So, has it come to support, but does it look like it's going to reverse? Do they have strong candles like that? Also, you can manage your trades, utilizing those other indicators I mentioned at the beginning of the video. Let's look for another engulfing candle here. Look, there's a very strong drop here. There's an engulfing bullish candle. Then, large-bodied bearish candle. Here, there's also a large-bodied bearish candle. So at this point, going long would be ridiculous. A huge bearish candle has come one after another, large-bodied. At this point, it's clearly going to drop anyway. Engulfing candles alone are not sufficient. If you've watched this far and learned a few things that you think might be useful, please don't forget to hit the like button. See you again in the next videos. Don't let the downturns get you down. There are big gains to be made.